Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway here at verifiedinvesting.com. We're going to take a look at the technicals, the data, all of that, giving us an idea about where this market is headed. Not only stocks, but also crypto as well as commodities. And we have a lot of things that are moving today. China stocks are ripping to the upside. Palantir, Tesla in motion as well as SMCI. So lots to talk about, inclusive of Bitcoin and gold. All right, let's start out by going over what the price action is showing us on the S&P 500 today. This was the jobs report on Friday. You could see the immediate reaction. Then the opening move when the stock market opened. So this was pre-market. Again, the 10-minute chart we're looking at, so each of these is 10 minutes long. Again, there's your push up at the beginning, and then notice how the S&P stalled out and went sideways into the end of the day, closing right here. Then this morning at 4 in the morning, we saw a little bit of an uptick and then a lot of sideways chop. Essentially, the S&P 500 is basically on the flat line, give or take. But that does not tell us what the internals are doing here, and I do want to discuss that. In fact, one of the keys that we're going to discuss today is inflation, because it does appear that inflation is starting to rear its ugly head. And don't forget, later this week, we're going to get CPI on Wednesday and PPI data on Thursday. So CPI is Consumer Price Index, and that again is an inflation gauge. All right. So we have that number there. If we take a look at the S&P on the daily chart, I want to just draw your attention with all these arrows to the key factors here. You have these levels all along here where this trend line has been major, right? So here you were above the line, bouncing off the line. Here you consolidated on the line. Here's your arrow, and then you got your breakdown. And notice this breakdown was your August swoon in the market, where we had that very volatile decline on the S&P and the NASDAQ. Then we came back up and we went right back to that line, right back to the line, and line. So the idea here is that using logic and analysis, it tells us that max upside on the S&P is to this line, which is just a little bit above 6,100. Again, doesn't guarantee that we have to get there, but the idea is that the upside amount of gain now is very, very, very small on the S&P versus the potential for a down move. And you can see again, maybe we got a little arrow here pointing with a little upside, and then the likely scenario is a corrective move. We also have our cycle date coming up around the 15th of the month. Just remember, it doesn't tell you that we're going to drop sharply off of that cycle date. It should basically tell us that there's going to be a change in character at the market, potentially making lower lows and lower highs. But still remember, it's before Christmas and New Year's, so very unlikely we'll see major sells till January comes, all right? All right, so there's your S&P 500, but just be prepared, guys. I've talked about taking a put position on the S&P. If we were to get up to that line, that's kind of what I'm waiting for in terms of a large put position. All right, let's go over a couple key movers and shakers in the market today. All right, first and foremost, let's take a look at Nvidia. Nvidia is down today pretty decently, about $3 on the day after closing on Friday around 142.40. We're trading at 139.40, so about a $3 drop. Now, the kicker is this, right? We basically have China, calling them out for monopolistic practices and looking into them. And a lot of people like me probably said, wow, I thought we weren't even allowed to sell chips to China, but that's not true. It's just the AI chips. So Nvidia still sells about 13% of their revenue still comes from China via their other chips that are allowed to be sold. And that's what China is looking into in terms of monopolistic tendencies. So again, 13%, if there's a penalty or if they're not allowed to sell those chips, then that would be a significant toll to the overall revenue of Nvidia through China. And so that's why the stock, again, is trading to the downside. Now, if we go back to the daily chart, look at this. This is something I discovered over the weekend. I've talked about here a little bit. Look at this pattern formation. A shoulder, left shoulder, head, and shoulder. All right, now this was before I knew this news came out. I drew this over the weekend, but we're now trading right in this lower vicinity here. And the idea is if we start to come down just a little bit, you're going to test support right here around 137 on Nvidia. If that breaks, you then can factor in a break of the head and shoulders, and you can target it out, meaning you can find your target. You take a plumb line, drop it to the neckline here. You take that distance from wherever it breaks, and that would be your short-term target. So we're looking at around $120 if the neckline breaks on Nvidia, which again, from basically a 153, 155 high, that would be a significant correction on Nvidia, and actually, interestingly enough, kind of jives with the cycle date that we've been talking about here. All right, next up in Tesla. Tesla continues to be a robust mover. Friday was incredible, folks. Look at how many green candles on Friday afternoon we got into the end of the day. Tesla in running from basically 2:30 in the afternoon, so an hour and a half into the close, ran from 375 to 390. Closed there, floated up in the after hours. This morning kind of was up, came down a little bit, floating up again. And again, now we're trading right around 397. Now, if we go to our daily chart here, look at this on the chart here. This is a great zone to look for a target. In fact, I'll go to the big board to kind of dissect it here. But basically what we have is two major trend lines that were giving us a coordinated target for Tesla. We take our low here. This is the February 2020 or March 2020 low. This is the COVID low essentially right there. We bring that through these lows here. It connects right through that high. You get this beautiful coordination of a trend line. And notice how this trend line meets the double top all-time high on Tesla. So this is at around $413. Remember, we're at $397. That's only $16 away or so from this major level. Now, on a technical basis, when you have two trend lines that are converging, right there, if price comes up into it, the probabilities increase of a pullback because not only do you have a double top, but you have an upsloping trend line. So again, think about it like as if you're running into a wall, right? We do a little stick figure here, and you're running into a wall here. Okay, that's going to be a tough play. You're running into a wall. That would be the equivalent of double top. Now imagine someone says, okay, I want you to run through this wall, but I'm going to put two walls in a row right here. Well, now your odds of getting through that are less, far probability-wise less. And that's the idea behind dual trend lines that are converging at the same price. It's creating a multiple barrier wall for price to get through. And so the idea again is that if you're looking to short Tesla as a swing trade, remember, I don't talk about long-term investments. I have no clue. I'll gladly say I have no clue where Tesla is a year from now, 5 years from now, 10 years from now. No clue whatsoever. But in a short-term market like this, as a swing trader, this would be a good level to expect a pullback on price off of. Okay, so just keep an eye on that, folks, as we get into some other charts moving today. Palantir is running higher again today, although it is starting to fade. This was on my list to potentially day trade in the Apex Live day trading room. I wish it wasn't pulling back here. I much prefer charts that are moving higher. But again, if this were to rally higher at the open, I do think there's an opportunity maybe north of $83 per share. But the point being is that this stock has gotten nuts. I mean, absolutely nuts, trading north of $80 pre-market. Look at the vertical nature of this mover here. Now, again, I was searching for a long time on this chart. I was going back to, the high pivot back in 2021. I was going through upsloping trend lines. I still have not really found a great level in terms of a swing trade. Day trades are different. We can find little short-term connectors. Swing trades, this is a little trickier. Is Palantir overbought? Yes, ridiculously overbought, but that doesn't necessarily mean it's done running on a multi-day basis. So this one, I'll just be honest with you guys, I don't have a great swing trade level at this point. More than anything, when you don't have these levels, what you want to do, right, what you want to think about is looking for a daily candle reversal signal. So for instance, if you get a topping tails are great reversal signals. If you get an engulfing reversal candle, those are candles that can form on a daily basis. Like we could get one of those today, and then, okay, now we have a pivot point to trade against, looking for a pullback on Palantir to the downside. Right now, we don't have that, but I will keep you posted on a daily basis. All right, SMCI today is pushing higher. SMCI, they basically found no irregularities by their internal investigation. My only issue with that, folks, is that in general, that's a little bit like, it's like, is the fox watching the hen house, as they say, right? You want to see an outside source say, okay, there's nothing shady going on here. But number one, and the most important, and why the stock is up again today, another almost 10%, is that they basically said the NASDAQ is now giving them till February to make that filing. So, and again, you got to imagine in 2 months or whatever it is at this point, they can get that filing done and remain listed. Now, what's interesting here, folks, is see this trend line right here? See this, the high, this was after hours on Friday. So when the news hit on Friday, it went here, then it pulled back, and then it hit here again. So you see this trend line, right? Well, if we flip back, this is a level I actually showed you guys last week. It's a gap fill. So that now is your level to trade against. And I would even say as high as the 50 even number to use that 50 even number. But 49 to 50 is a major, I repeat, major level of resistance. We can even use these high pivots right here to bring that across right there. So these two lines, this is a zone to look for a pullback on SMCI. The stock again has rallied now from $17 basically back to 49 to 50. All right, next mover and shaker here today is Alibaba and Baidu and all of the Chinese stocks. Look at these moves, guys. Incredible moves. I want to show you some of these daily charts because they really tell you a story. If we go to our daily chart on Alibaba, look at this, right? And I'll go to the big board. Some of my favorite trend lines here. Most people don't see these. You know, everyone sees a double top. All right, that's easy. A double bottom, that's easy. It's a pivot low, a major pivot high. These are much more unique in terms of most investors not seeing them. But you take the high going back to basically October or August, September. We look at this high and we connect it through here. You then had this breakout right here where you had the massive move up. And what do you guys know I always talk about? I talk about scene of the crime, right? The retrace to the scene of the crime. It's where you get a breakout and then price goes, and then it somehow finds its way back to that level before making its next move up. Well, if you look right here, it goes literally to the penny, back to that trend line, tags it right there, and then went up, and now is pushing like this. It's a great example of the methodology that when you study technicals, you know, this is one of those things where most retail investors will be like, oh man, I got to jump on board here. Okay, I'm going to jump on board here. Oh, I'm going to jump on board up here. A disciplined trader is never going to pay up that much, not as a swing trader. Like if you're a long-term investor and you're like, hey, I love China for the next 10 years, it doesn't really matter. These are rounding errors in the scheme of things. If you're a shorter-term trader, then you're like, man, I can't pay up 10%, 15%, et cetera. So you wait patiently, use that discipline, and just say, you know what? If I miss the trade, be okay with that. Be at peace with that. There's always another trade around the corner. The key is oftentimes these will come back in and you'll get an opportunity, a secondary opportunity, believe it or not, at just as good a price here before the breakout occurred, and that's what you got on Alibaba. Now again, what's the key here? The key is that China is now talking big stimulus. So again, we're talking, I mean, they've done stimulus before. The market's been kind of disappointed. Now they're talking major stimulus. And what I thought was interesting was Jack Ma, who started Alibaba, right? He's now back in the spotlight. He's giving speeches. It almost seems to me like the Chinese government's finally saying, hey, listen, we've got to lure back in business investors and say, hey, we are open for business, we're pro-business, and they're starting to let him be out in the public more and more. And that's a real key thing here. And by the way, it's so funny how economic conditions create that need for Jack Ma to come out to the front and center versus in other situations when the government was cracking down, they wanted to go hide him and push him away and say, oh, you know, these business leaders that are billionaires are bad. But now it's kind of like, wait a minute. We just lost so much investment. We got to get people back. So bring him back up, bring these other business leaders up. So anyways, a couple little tidbits on that. All right, now let's talk some inflation, guys. Here's your chart of cocoa. All right, so we have cocoa here. Look at the run recently in cocoa, and I was doing a lot of analysis over the weekend, and more we're seeing commodities, maybe not so much the metals right now, like nickel and copper, but the commodities like cocoa, coffee, even sugar are starting to break to the upside. So look at this run recently in cocoa, and for 2024, this is where cocoa was earlier this year. So we are up quite a bit. If we do our measurement here, we can see from the beginning of this year, cocoa is now up 171%. Well, look at coffee. Coffee, by the way, hitting resistance, but look at this run here on coffee. If we go to the beginning of the year, right in this range here, coffee is now up 83%. And so my point being is that be very wary here, guys. We are at a point in the economy where the economy is still strong. It's still hanging in there, but at the same time, we're seeing situations where commodities are starting to push up, specifically food. In fact, wheat looks like it's breaking out. Corn is starting to turn around. And again, those are other commodities that are very keen on food inflation. And the one thing I'll just say about food inflation is the worst type of inflation, right? I mean, you could make a case that energy, yes, energy is very important as well. That's staying low. Thank goodness oil has not run tremendously. But at the same time, everyone has to eat. So whether you're rich or you're poor, you have to eat. And that type of inflation is the most pervasive and the most negative overall for people out there. So just a little tidbit here, as the Fed is likely going to be cutting rates next week. Remember, next week we have the Federal Reserve meeting. They're expected to cut 25 basis points. Cutting rates creates more liquidity in the market, and we can be expecting to see a potential uptick of inflation when we get the PPI numbers this week and the CPI numbers this week, which again are those inflation gauges. All right, on to Bitcoin here, guys, real quick. Bitcoin is pulling back to 99,100. It's bouncing a little bit pre-market. Don't forget we have a doji here on the chart. So let's go over what a doji is. What the heck is a doji here? So a doji basically is a candle where you have a heavy volume, right? So at the highs of a chart. So it has to, by the way, you get dojis all the time, right? I mean, here's a doji. Here's a doji, right? It's these smaller candles with closes. The dojis that I pay attention to are at the highs of charts. They have a ton of volume, which this candle did, right? Because it was at the move up to 104,000, then the reversal to 92,000. And you want to look and say, okay, this is a big candle. So notice the size of this from high to low versus this is minor, and these weren't at the highs of the charts, right? So those are the things you want to pay attention to. And that tells you that essentially price was run up, and then because of the high volume, big money was selling into this, and essentially price met. The buyers and the sellers met in a battle, and it was a stalemate. Now, it's a stalemate, so you don't know who's going to win on this. But as a technical trader with the high volume, you have to take note that it was a stalemate. Does that mean that we're starting to run out of buyers for Bitcoin in the short term? For those of you that are hardcore Bitcoiners, don't worry, I'm not talking about the long term. I'm bullish long term still. But I have to look at this on the short term to see if there's a potential top signal. And really, the way you treat this is very simple. And again, I love technicals in the way that how simple it is made for us. What we do is we say, okay, you have a doji here. We're unsure about the direction. So how do we know which direction is going to move? Simply put, you'd use the high. If price closes above the high of the doji, you're headed towards 107 to 108, right? Those are those upside targets that I had early on, right? That's the upside max there based on the parallel channel that runs back to the 2017 highs. Here, if we take out the lows, now you have a bigger breakdown because you've now violated the low of the doji, which is around 92,000 to 91,000, and you look for further downside. So it's very simple to just monitor this. Right now, you know, the bulls will tell you, okay, the bulls are still in charge. The bears will tell you the bears are in charge now because of the doji. In reality, we don't know, but we're going to watch. A violation here, bears are in charge. A violation here, bulls are still in charge. Simple done, simply done. So 104 and 92. Those are your two levels to watch, all right? And again, if we break below 91, 92, 75-ish could be a potential downside target. And if we get above 104, then you at least get up to 107 to 108. We'll watch and see if we get beyond that. All right, so again, just kind of explaining the doji pattern there and how to trade it appropriately. Let's look at gold real quick here, guys. If we bring up gold on the charts, gold is actually having a good move to the upside. So this looked like the bear flag was going to play out, and then you're getting a nice bid today to the upside. Just remember, as long as you have this wide range reversal candle, then this technically would be bearish price action, right? So again, we could draw a parallel in here. This again is sideways chop. Nonetheless, it's a good strong day on gold today. I saw GDX was having a good day, but keep in mind, you're still within this wide range red reversal candle here. So on a technical basis, the bias is slightly to the negative side. It's not as negative as it was over here when it looked like it was going to break down. But again, it's still within this wide range red bar, so it still has a slight negative bias. Silver, look at this. Here's your wide range down move, your flagpole, and then we've drawn this in before, but down there, and then now you're back up here. The question is, do we pull back like this off of this level, or do we break above here and then negate the pattern there and go back to a bullish move? And so, again, notice how in technical analysis, guys, and I want to be clear on this, is that when you have these levels, it takes a lot of the guesswork out, meaning that the level is the level. We trade above that level, okay, now you start favoring the upside. If you trade below this level, the bear flag starts to play out. Versus just being like, you know, like, oh, well, I have a long position in silver, so I'm just going to be bullish regardless and ignore all the other stuff, put my head in the sand. This is a way of trading using technicals and data where you're not going to be always right. I certainly am not. But Will I be right more than I'm wrong? Absolutely, by using the technicals to my advantage, essentially being the casino versus the gambler. And that's really the essence here, is that proper investing isn't gambling, assuming you're using probability-based strategies like technical analysis. All right, next up, let's go to oil. Oil getting a small move up today. Again, you know, you have the rebels taking over Syria, throwing the Assad regime out, all this kind of unrest there. What's going to happen in the Middle East? And the best that oil can do is muster a $1.16 gain. What does that tell us? It tells us the U.S. is still producing a ton. It tells us China is still struggling as an economy and not using as much oil as it could be. So overall, there's nothing really new here. Just keep an eye on these levels, right? You have your down sloping line here. You have your flat line right here. As long as we're trading in between here, I would expect continued chop. There's no trade setup here on a swing trade basis. If we break here, the idea is to short. If you break above here, you look for your bigger move to the upside. All right, lastly, natural gas real quick here, folks. Let's go over that one. And if we see nat gas on Sunday night when commodities opened up sharply higher, and then has just slowly faded. Overall, like I've shown you guys, we can even take that away at this point. This is your buy level down here. This will be resistance. I'm not going to short there. I think I've shown you guys before here. This is my short level. If it were to surge up into this level, I short. If it falls into this level, I buy. Aside from that, it's a no touch. And again, to be honest, most charts you bring up will be no touches, meaning there's no great high probability setup. All you need is a few a day. A few a day keeps the poorhouse away, as we say here at Verified Investing. All right, guys, that's all the analysis I have for you today. As always, thanks for tuning in, and I'll see you tomorrow. Take care.